So El Salvador bought Bitcoin when it was worth over $60,000 per BTC in October 2021. They've been pretty consistent with buying whenever there's a dip. I mean, Bukele said, that dip of $60,000 was, I guess, well worth the purchase. But should taxpayers be concerned, or does it represent a small fraction of taxpayer money that it doesn't really make a difference anyway?
Hi, very happy to be here. I think both those things are true. I think taxpayers should be concerned because it is a use of public money that's being spent on a volatile cryptocurrency. It's a very risky thing to do, and it's not clear at all that it's the best thing to do with taxpayer money. But at the same time, it's also a relatively small amount of money. The president, according to the tweets and what people have figured out from that information, they've spent about $100 million, which really isn't that big for a sovereign state. Their fiscal deficit is $1.5 billion, their GDP is $27 billion, and the unrealized losses on this portfolio are about $50 million. So it's a small number in the much bigger picture of sovereign finance. So the losses that are unrealized really aren't that large, but it is concerning, definitely, that the government is using taxpayer money to buy Bitcoin.
Certainly. So I suppose it does not have much of an impact on the economy. Could you perhaps discuss what is the state of El Salvador's economy and their debt situation with the IMF? Are they at risk of default?
Sure. So I think the direct impacts of the unrealized losses aren't large, but the message that the purchases send to capital markets and the message that Bitcoin adoption in general sends to capital markets is certainly not a good one. I mean, El Salvador's long-term bonds are trading at 35 cents on the dollar, which means that markets are pricing in default. They're pricing in almost all restructuring scenarios. El Salvador recently announced a debt repurchase where they hope to buy back the 2023 and 2025 bonds. If that operation is successful, it could save taxpayers some money, between $100 and $300 million, depending on how many bonds are tendered for repurchase and at what price they are tendered. So it looks like, if successful, this operation could postpone delay for some time, but ultimately, capital markets think that El Salvador's public finances are not sustainable and that default is coming. And the underlying reason is simple. The country has a very large fiscal deficit, it has a very high debt level, and its debt is very expensive. So ultimately, what the country needs is a fiscal adjustment. Tax increases, expenditure cuts to bring that deficit into sustainable levels so that they can once again tap capital markets and secure financing at a reasonable rate. Of course, an IMF program would be very helpful in regaining market confidence, and it would be very helpful in financing the adjustments as they are undertaken. But we know that El Salvador and the IMF's relationship is quite rocky. So I would say that El Salvador is certainly in a tough spot. It has a high debt, a large deficit, and it needs to undertake painful fiscal adjustments to get the fiscal house in order.
I wonder if Bitcoin is a bit of a Hail Mary in lieu of all those challenges that they face fiscally, economically. And, the finance minister said that he was essentially defending the Bitcoin purchases, saying that tourism and investment will make up for those losses. Is that a realistic perspective?
So I haven't seen any data one way or the other about the tourism and the foreign direct investment, but my suspicion is that it's not going to be material. That it's really just not that big. GDP is $27 billion, and you're talking Bitcoin tourism and Bitcoin foreign direct investment and Bitcoin jobs. I think it's really a drop in a bucket, a drop in the ocean. I don't think it's very big, but there isn't really data to bear that out one way or the other. And as to whether the Bitcoin purchases are a Hail Mary, I think to some extent they are. If you look at, so at one point, El Salvador discussed issuing these so-called volcano bonds, $1 billion bond with a 6.5% coupon that was going to be tokenized on the liquid sidechain of the Bitcoin blockchain. That idea has since it's either dead or very, very, very unlikely that it's actually going to happen. But if you look at the proponents of the bond, what they were essentially, their theory of change, what they thought was going to happen with El Salvador was that by taking out leverage to buy Bitcoin, if the price went up, they could make a lot of money. Of course, trading cryptocurrencies can be profitable, but it can be even more profitable with leverage. It can also be massively devastating, and it can be even more devastating with leverage. So what leverage does is it amplifies the upside and it amplifies the downside. And so the idea of the Bitcoin bonds was to get leverage to make this Hail Mary, to make a big, big, big Hail Mary with a $500 million Bitcoin purchase. So I think to some extent there is wishful thinking there, that by buying, people that bought Bitcoin in the early 2010s, 2011, 2013, 2015, they made extraordinary returns. But if you look at the price chart in log terms, you see that it kind of looks like a rainbow. So returns have been slowing and tapering over time. And so I think that a lot of people and governments and anyone that buys cryptocurrencies thinks that those high returns from the beginning can be sustained when realistically they can't. So I think there's definitely some of that in there in the rationale. Absolutely.
Yeah, what you're talking about reminds me of Three Arrows Capital, a highly leveraged hedge fund that was just betting that Bitcoin and cryptocurrencies would just continue going up. But when it started crashing, it was unsustainable, their model, along with Celsius, Voyager, and now they've all declared bankruptcy. So it certainly would be scary if that were to happen to a country like El Salvador.